Hi, good evening. This is Scott at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. I want to take a look at Workday. This is ticker WDAY. But before I do that, I want to tell you about a new promotion that we're running right now at Stock Market Mentor. It's our Fast Track series. For the next couple of days, you have access to our Fast Track series, which is all new for 2020. All you have to do is sign up for a free trial at StockMarketMentor.com. You'll get access to 30 different trading modules, including 20 brand new tutorials that will upgrade your trading no matter how long you've been at it. We'll also have a live webinar series hosted by myself and Dan Fitzpatrick. And of course, the best part, it's totally free. All you have to do is go to StockMarketMentor.com, start your free trial, and if you don't like it, you just cancel, and you don't get charged anything, so it's risk-free. Definitely check it out. We spent a lot of time rebuilding Dan's Fast Track series, over 30 tutorials, totally free, and they will for sure help upgrade your trading. Okay, now on to Workday. I want to see if Workday can get back to work. Stock has really just been resting here the last couple of days. As you can see, it bounced off the 50-day moving average in May, ran up quite nicely, consolidated. We're now back at the 50-day moving average. And the thing I like about the 50-day is it's a key level that institutions use. And for us as retail traders, we want to go where institutions are going. So as you can see, we had this kind of nice sideways drift into support, and we've built a little bit of a flag pattern here, a little downward sloping trend line holding right at some key moving averages. The stock is just right around the 8-day moving average, the 50-day moving average, and the 21-day exponential period moving average. So we're right there at support. Now, what I want to see from this stock is a move above this downward sloping trend line coming on volume, because that shows us that not only are institutions having to buy these dips, they're having to reach up higher to get the stock that they need. And by doing that, they should push the stock higher. So I would set an alert on Workday probably around 185, maybe 185.50, something like that. And the reason we want to set it just around there is because, as you can see, that level has acted as resistance in the past. So we want to be able to take out that resistance and do it on volume. So I have an alert here. I'm going to set it at 185.50. And we'll see if that triggers. If it does trigger, then we're able to take a good low-risk entry, because essentially you can put your stop just below today's intraday low, right around 180. You're only risking about 3% on that trade. And if it does break below today's intraday low and close below today's intraday low, well, then it's not breaking out. It's doing something different than it's done in the past, because in the past, it's continually just printed higher lows. So we like that. So here on Workday, I have an alert at 185.50, and I think you should too. Hey, give me a follow on Twitter if you don't already, at Scott Trades, and be sure and check out Dan Fitzpatrick's Fast Track program at StockMarketMentor.com. We'll catch you next time.